Hey guys, this is Alan from the Equity Traders, and this is our part 1 of the Learn to Trade, our chapter 1 of our Learn to Trade, where we're going to go through our Learn to Trade parts of the website. I've basically in the description put the links to the website where you can go and physically read it as you want to. However, this video is going to go through those same web pages right now, and I'm going to explain and talk around it as we go. The videos are 15-minute long, so I'm going to be going through pieces and pausing and going to the next one and going to the next one. So it's probably going to be a few videos because of the explanations and the added extras which are going to come with it. So without further ado, let's go to the website. Learn to Trade Chapter 1. Again, the link is at the bottom of the page. If you want to, you can go to the Academy and you'll find the page over there. So Learn to Trade Chapter 1. This is on theequitytraders.com, and I'm about to go through Chapter 1, the first part. And the first part is you want to be a trader for various reasons. So I've basically had a look at the reasons why people want to be a trader. And, the whole YouTube, Telegram, Instagram hype about all these millionaires, guys that have made a killing in a week, 2 weeks, a month, driving all these snazzy cars, all these beautiful suits, and the way they dressed, and all their lovely homes and houses. Guys, don't be fooled by that. If it was that easy, we'd all be doing it, and South Africa would be a very, very rich country. A lot of these guys are sponsored by cars. A lot of these cars are not even theirs. They borrowed it from a dealer. Can we test drive this car? And we drive around the corner and we're just taking photos and photos. Yes, some of these guys own these cars. Yes, some of them have become rich. I'll give it to them. They have. Did it take them a week? No. Did it take them a month? No. They've been doing this, hustling, doing this for years. And they've managed to get somebody to give them a large amount of capital. You cannot, with $100, $1,000, $5,000, all of a sudden be driving an M3 next week and living in a 5-story house worth $5 million. There's no way. There's no way. If it was that easy, we'd all be doing it, or getting close to be doing it. So let's quickly go through what the website's got to say. So you have some money and you have a need to invest your money. I want to quickly just tell you that there's a page called Brokerage on our website. On the top there, Brokerage will also be given in the link below. So Brokerage basically means you can trade with Trade Nation, where you can deposit your own money into Trade Nation. And you can trade various forex, various stocks, commodities, indices. They can trade it on MT4 or you can trade it on cloud. And what's nice about this is you can trade shares wherever you want to trade them. You can trade shares overseas, you can trade shares in UK, in the Euro, in the US, wherever you want to trade your shares. And they've got a list of the shares. You can go trade from FNB, Capitec to, I'm just naming banks now, but you can go and trade the UK shares. You can trade Netflix, Amazon, Facebook, all of these shares and on Trade Nation. If you don't have capital, you can go to Audacity Capital, our other partner, where they supply you with $15,000. And you trade and you have a 10% split. So 10%, you make 1,500. You take 750, they take 750. Then once you've made the 15,000, they'll double it to 30, they'll double it to 60, they'll double it to 120. And so it carries on. So imagine having a $120,000 trading account. But okay, you've got to make the $12,000, to be able to split that. So, it is a challenge. The leverage is very, very, very low. So go and have a look at Audacity Capital if you need capital to be able to trade. So you have some money that you need to invest, and you've heard the return on the stock market is better than the big companies offer, better than the bank's interest, and better than paying oodles of commission to local investment and hedge fund managers. Money in the bank is money in a normal bank account at 4% interest, and then SARS wants their cut. money in a long-term investment, you'll maybe get 8% if you've really got a lot of money and you've got a good relationship with your bank. Again, 8% income from that investment, and then SARS once interest on investment gets taxed 20-30%, whatever the case is. So if you're making 100,000, if you're investing 100,000, you make 30,000, 80,000 rand over a period of time. Remember that SARS is going to take 20-30% of that. Then the bank's going to take a bank charge, and so on and so on. When you look at it at the end of the day, return on investment, you could be looking at 4 to 5% after tax, after costs, after whatever, and that's over a period of time. So, yeah, but leaving the money in the bank, I don't know if that's a good thing. And money in the bank is like money in a pocket, it burns holes. So you end up withdrawing earlier, you got to pay interest, you got to pay penalties because you're drawing your money earlier. So, I don't know, I wouldn't leave my money in the bank. I'd rather buy a property. Again, we've got a blog on the difference between investing in the stock market and buying real estate. Go and have a look at my blogs, and you can read that part as well. So you've heard people became millionaires in a week, or you've seen the videos and social media hype on it. They can take a few rands, put the same lot sizes, and buy or sell NASDAQ at 3:30. They made thousands, and in a week they bought these houses and cars, and look at their lives now. So I just wanted to talk about this and tell you that a lot size will depend on the broker, but a lot size, one lot, will require anything from $300 to $500 to $800. So if you're going to put $1,000 in a trading account and you're going to bet one lot size, you are putting such a risk on your trading account. If that trading account has a short stop loss of a couple of pips, you're going to lose $200-300 if you've got a stop loss. And if you don't have a stop loss, it's going to drop and it'll blow your account. So you cannot trade one lot or 5 lots like these guys are with small money. You need big money in the account to trade big lot sizes. Then they'll come and they'll show you videos where they're trading 0.1 lot sizes. And if you're trading 0.1 on a small $1,000, and you are telling me that you're making $100 on a 0.1, well, you've had to leave that trade for a couple of hours or a couple of days or weeks to be able to make that kind of money. When you start trading, you'll find that the small lot sizes make small revenue. It's a time thing. It's not making money in a week. You cannot take NASDAQ at a 0.1, trade it, and think you're going to double your account in one afternoon with NASDAQ at 3:30. You can't. I suppose some people risk it, but you'll have a look at when we get into other topics like margin and trading your account and what the risks are if you don't put a stop loss and what the risk management is. If it goes the right way, it goes the right way. But you cannot double your account in one afternoon. I haven't seen it, and it's just too risky for me. So learn to trade, understand the lot sizes, understand the bull dust or the hype on social media that these guys are giving you. And trust me, they're showing you how they won NASDAQ at 3:30 once. How many times have they lost before they made that money? So you need a job or you need income. With unemployment where it is in South Africa, worst in the world, thank you government, worst in the world, you need a job, no money for varsity or college, you're going to trade for an hour every morning and you have the rest of the day to spend your money. Guys, yeah, I would rather pay for my varsity and pay for my college than take my varsity or college money and spend it on trading and hope to God I'm going to win. 70%, some brokers have shown 80% of traders lose their money. So until you are able to trade and be that part of that 20% of winning traders, guys, learn to trade first. Use the demos and understand before you jump in and think you're going to be able to pay for your varsity or buy a car within a week. So this is your new career choice. You watched Wolf of Wall Street and this is the life. This is your career. No physical work. It's easy to do. It's online. So why struggle? Well, yes, learn to trade. Understand how it is to trade before you become a full-time trader. So speaking about that, becoming a stockbroker. Let's go through becoming a stockbroker. Because, everybody thinks you're going to come out of varsity, I trade Forex. So what do you do for a living? Now I'm a stockbroker. What are your qualifications? No, I trade on the Forex. I've done a learn to trade course. I know. No. A stockbroker, okay, is somebody who has 3 years qualifications and a minimum of 3 years practical experience. Somebody who has, physically done this with a trading company and understood. And they are people. A stockbroker doesn't trade for himself. A stockbroker trades for big banks, trades for big clients, investments, hedge funds. Let's go through it. So if you want to know more about being a stockbroker, here's the lowdown. The role of a stockbroker has changed somewhat in the sense that online platforms have made it so much easier than the old vision we had of a stockbroker on the floor. Now, when you go and look at stock markets and you look at some of the videos that the guys have got, you'll find that, they were all on the ground and they're all on the floor and they all got hand signals and they're all shouting and screaming. Yes, that still does happen, but that's not generally how we're buying stocks today. They've made it so much easier for us with MT4, MT5 and cloud platforms. And, we can trade stocks on our own. When you're buying and selling stocks, you don't own the stocks. You're not a physical shareholder. You don't get a piece of paper to say you own 10% of that stock. So when you're buying stocks on the actual stock market, like the Johannesburg stock market or the New York Stock Exchange or, any one of the international stock exchanges, and you're physically buying the shares, you physically get a certificate where you can buy or you can sell those shares. That's different to trading online. Okay, now stockbrokers generally will buy and sell shares and you own an actual share, on that stock market and you get a physical certificate. Those kinds of shares you don't buy and sell in a day. Well, I suppose you can, but you buy for a longer term. You buy for a longer period. This is buying anything from a month to 3 to 6 to a year to 5 years to 20 years. These are long-term shares. The Warren Buffetts, for example, own shares in Coca-Cola, and he's owned it for years and years. And it's worth millions and billions. And that's why when he does his count of how much cash he's got, the biggest value of his cash comes from physically owning shares and stocks in companies, not, trading platforms. So make sure that when you understand, the shares, you're understanding I own a share or I own, an investment in shares and I've got a physical certificate for that. So a stockbroker, the role of a stockbroker has changed. We understand that the general role of a stock trader is to manage the financial portfolio of individuals and organizations for various benefits, along with advice from investment analysts and knowledge of regulatory frameworks and exchange rules. Stockbrokers will advise their clients on which stocks to buy and which to sell. This advice is not free, and the advice comes with some risk, some mitigating circumstances. Guys, trust me, there's no broker, no stockbroker in the world that will tell you this share will go up or this share will come down or this will. They can anticipate what can happen and what can't happen, but there's no guarantee. Nobody in the world knows what shares will do. In order to become a qualified stockbroker, the required examinations will need to be passed. So that's the 3 years that I was talking about. In addition, a minimum of 3 years relevant practical experience is required. This experience is typically gained in the financial market industry. The financial market industries include the following, and I've listed them here below. Very briefly, we want to look at who is this Learn to Trade for. Beginners. This will give you the full picture from beginning to end and is a good place to start so that you don't go wrong from the beginning. Also, you have the right knowledge to make the right choices from the get-go. Intermediate, you are trading already, thinking you just skip over a few of these topics. Well, I advise you to read them just to make sure that you know everything that's going on. Advanced, you're making and losing consistency is almost already there. You have left your full-time job and there is new career now. I suggest you go through the topics and see if you can learn something from these topics. You might find a bit of revision or another point of view which might just advance your trading even more. Don't think you're too clever. Knowledge is power. So go through this and understand whether you're a beginner, whether you're intermediate, or whether you're advanced. This is the end of the first part of chapter 1.